everybody, Stephen Evans here, and today I wanted to talk about stock splits. With Apple and Tesla recently splitting and seeing kind of the mad rush to get in and some of the hysteria behind it, I wanted to talk a little bit about what a stock split is, why they're done, and what it does to the value of a company. I wrote a little piece of paper here that talks about stock splits, and in my example, we're going to do a 1-for-5 stock split. So in this, you're going to have 1 share is going to turn into 5 shares. So at the beginning of this, we've got 1 million shares. The company has a total of 1 million shares. Total outstanding value of that company is 1 million shares at a price of $100 a share, which means this company is worth $100 million. So 1 million shares at $100 a share equals 100 million. So after this split, your 1 is going to turn into 5 shares. So after the split, there are now 5 million shares, and each one of those shares is worth $20 a share. Now, the big thing I want people to notice here is market value with 1 million shares, $100 million. Market value of the 5 million shares at $20 equals $100 million. The company is worth the same. So if you had 100 shares of this company at $100 a share, after the split, you would have 500 shares of this company at $20 a share, and it's worth the same amount of money. So that is one of the things I want people to look at. Here you go, is a little closer look. I know it's not the best handwriting in the world, but that is not my job. I am a numbers person, not a handwriting person. But that's what I want people to know, is that the market value is the same. And the stock price, this is one we get all of the time. People are like, oh, $400 a share, it must be an awesome company. It must be worth a whole lot. Well, it could be a $10 million company, whereas you could have a stock at $10 a share that's a $20 billion company. What matters is the market cap, the market value of that company, not the share price. The share price is just out there. Like some companies split, Amazon, $3,000 a share. Apple did that split. They did a 4-to-1 because their stock was getting a little high. So they like to keep their stock at $100 because the reason people do this is to make it affordable for the retail investor. It's a lot harder to buy 100 shares at $3,000 than it is to buy 100 shares at $100. So they do it to make you, the retail investor, able to buy their stock. So that is why they do stock splits. That is one of the reasons. There's probably a lot more reasons, but I want you to know, but when they do the stock split, the market value is the same. So a lot of those people who watch Tesla and Apple run up because they thought they were going to get some magical shares, it's not. You don't get magical shares. There's no more shares. It's the exact same thing. If there's 100 million shares and now they did a 5-to-1, now there's 500 million shares. So just remember that. I wanted to get that out there. I hope you guys have a wonderful day, and we'll talk to you soon.